Welcome back. This is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 10, 2017. Very bullish action this week. Dow Jones, S&P 500, the QQQ all broke out to fresh all-time highs. Of course, the market is overextended to the upside, but by being this overextended to the upside, it is proven to be extremely bullish. I think short-term small caps may be ready to outperform and maybe even break out to fresh all-time highs. I think more importantly, I see no major divergences in advanced decline lines. Technology, financial, discretionary hit all-time highs. Industrials are close behind. But I think the healthcare and the more defensive sectors are playing catch-up and may catch up to the general market. I'll show a recent trade we did at MasterCharts Trading, and that's in EEM, emerging markets. We'll then look at junk bonds, treasury bonds. They are possibly going to move higher, which could put pressure on stocks. US dollar showing definite signs of intermediate bottom. I'll cover euro, pound, Canadian dollar, and Swedish krona in this week Forex analysis. Then we move on to gold. We'll try to see if we can find some short stops for GDX, and also we'll look at XLE, oil, which again frustrated everybody, and natural gas. Alright, S&P 500 ETF SPY on daily time frame. So this pretty much speaks for itself. Fresh all-time highs, breakout to fresh all-time highs, very bullish action. And we had there was a breakout here, a pullback. I thought this was a breakaway gap. I guess we didn't break away, but then again, we are seeing push to all-time highs. So this is quite bullish. Advanced decline line for S&P 500 also hit all-time highs. So this is good news, I think. The volume is a little bit lacking, and maybe we're going to see some sort of a corrective action, but that does not necessarily mean we're going to see a pullback. Maybe we can just see something like this, a sideways consolidation. Here's a little bit longer term chart for S&P 500 underlying index, SPX. Here what I wanted to point out, first of all, is that we're not even that overbought. This is RSI. We got more overbought here in December. Had a very small correction and then fresh all-time highs. So right now we're not even that overbought. But an alternative explanation is that this is a bearish divergence, and you can see a little bit of a loss of momentum. So that's another alternative explanation. As far as longer-term indicators, S&P 500 percentage of stocks above the 200-day exponential moving average and the bullish percent index. Don't see any major issues. Here's the percentage of stocks above 200-day EMA, finished at 80.8%. Here we had 80, so not really nothing to speak of as far as divergences. Bullish percent index, slight divergence, but not very big, maybe a few points basically. So not a very big deal, I think, right now. Here I pointed out a couple of weeks ago this triangle consolidation, beautiful breakout, 3 beautiful weeks. Now we have fresh all-time highs. So this is looking really good right now. Here's a Dow Jones Industrial Average. Fresh all-time highs, breakout to fresh all-time highs. So far it's looking really great. Confirmation in advanced decline line right there. Volume is lacking a little bit, but not major really, not a very big divergence here. Additionally, we can see that we're not even that overbought yet, so we could see further push higher. Here's QQQ. It's just an incredible, very strong move, basically. If you listen to my previous videos, I maintained in November here after the elections, there was a little bit of underperformance. I maintain that we should be seeing, basically the stocks correlate very highly to one another. So when S&P 500 was breaking out, I think underperformance in QQQ was simply a buying opportunity. Now we're seeing fresh all-time highs, and QQQ is outperforming, very overextended. But then again, it took a lot of buying to get up here, so this is definitely strong looking chart. You can see the volume has been dropping off steadily, so looks like we are gonna get some sort of a corrective pattern. I don't know what it's gonna be like. Maybe we'll get a pullback, and maybe we'll just trade like sideways like that. Here, advanced decline lines, advanced decline volume lines, and unbalanced volume actually, all three are confirming all-time highs, so I don't see any major divergences. Here's QQQ again, a little bit longer term time frame. Here's RSI. Again, we became overbought, so what are you gonna do? Overbought does not mean weak. Overbought means, it's a strong buying pressure. Right now I see no divergences here on the percentage of stocks above 200-day, as well as the bullish percent index. In fact, we made a higher high here, so this is looking like a good looking chart. Here's IWM. This one kind of had a really strong move in the beginning of this surge, and basically we should just have this big choppy mess here for the past couple of months, but looks like we may be breaking out to the upside. Some of the other small caps are breaking out as well, so it's possible we're gonna see a fresh highs in the small caps. We are a little bit underperforming as far as the advanced decline lines, but I think if the general market continues higher, I think small caps will follow. And here is another piece of the puzzle. Looks like RSI here in December became overbought, but right now we're not on that overbought, so it's possible that we're going to break higher. Right, and here is a NYSA composite, also fresh all-time highs here. This is a very broad measure of the stock market, so this is pretty much confirming the bullish posture here. Here what I wanted to point out is the advanced decline line and advanced decline volume line. This is probably as broad as it's going to get, and it seems to be breaking two all-time highs, so this is certainly showing a bullish posture. I don't see any major divergences in the percentage of stocks above 200-day EMA here, or in the bullish percent indexes. So far so good, really. All right, and moving on to the sector funds. Here is XLK Technology, very similar to QQQ, very strong move. All-time highs here, all-time highs on advanced decline lines, so no major issues there. Financials, same thing. This are multi-year highs. Marginal high, but still, nevertheless, it's a high. A little bit of a divergence, but nothing to speak of. Not very major divergence. Consumer discretionary, all-time high as well. And actually I need to update. This is all-time high right there, advanced decline line. advanced decline volume is lagging a little bit, so maybe we'll finally see some sort of a correction. Industrials, this is all-time closing high here, so also very good looking chart, and this is also all-time highs in advanced decline lines, so important confirmation. A little bit more defensive sectors, XLV, healthcare. This is not a bearish chart, it's just underperforming. I think that actually it's attempting to catch up. I mean, look at this big candlesticks. So I think it's attempted to catch up to the general market, and it's been, biotech is certainly a big part of this. XLP, consumer staples sector. Also, I pointed out several times in the past that we had a bullish divergence in advanced decline lines, and we were simply underperforming, and looks like we are now moving higher in the sector. Real estate, pretty much the same thing, simply underperforming, but these are still stocks, and stocks move in lockstep with the general market. So it looks like real estate is also attempting to break higher. Utilities, look at this choppy mess, just incredibly choppy mess. But I think that this was the charm right there. This is the candle, and then pulled back a little bit, and finally we're breaking out. So it looks like this choppy mess is finally behind us, and maybe we'll get some clarity one way or the other. I think this is a bullish chart again. I mean, this is all-time highs in advanced decline line. And the all-time highs in XLU was back there. So this is a bullish divergence. And here I wanted to show a trade we just recently did at MasterChartsTrading.com. This is my personal entry. I entered here December 27th at 34.40. And this is what I usually send to my subscribers, is my entry, initial stop. In this case it was at 33, or basically below this low. 3 targets, entry ATR, which is average true range, and risk coefficient, all this stuff. But if you're interested, go ahead and sign up MasterCharts Trading. You will get all this information. But here, what I want to point out is, just a very nice, strong move in emerging markets, and this are actually, I think, are these 52-week highs? Let me take a look. I mean, a very strong move, but this is a yeah, these are indeed 52-week highs. So. Good looking trade basically. So if you're interested, do consider signing up at MasterChartsTrading.com. Alright, and moving on to the bonds. Here is a junk bonds, which I kind of lump with the stock market because they are correlated highly to the stock market. This is a daily time frame. So pretty much we moved nowhere for the week. Last week's highs was 36.90. In fact, let me just go to weekly chart. So here's a weekly chart. This one again correlates very highly to the general stock market. So you can think of junk bonds as an extension of a stock market. Pretty much just traded sideways. The previous week's high was at 36.91, and this week's high was again at 36.91. So we're basically trading close to all-time highs. So again, if the general market decides to pause and possibly pull back, the junk bonds most likely will follow. Right, moving on to the bond universe. This is TLT, 20 plus year treasury bond fund. So back here in December, I thought this was the bottom and the beginning of the bottoming action. Clearly, I was mistaken, and we continued to bottom until, well, actually, this was November, until it finally stopped falling in December. We had the first surge here, moved above the 50-day moving average. Again, pulled back here in January, and I thought that we might actually collapse below the previous lows, but we held. and we held support, well, more or less held here, and now is surged again. So this unfilled gap looms large, and I think it's a great target for the move in bonds, because it is also very close to the 200-day moving average. So I would not be surprised if bonds move up there. Here's that same area of the gap area, so it's possible we'll move up there. I think, like, to me, bonds right now, especially treasuries, is kind of an enigma, and I don't necessarily know what to make of them, because these were all-time highs, but these are 52-week lows. So I'm not sure, honestly, if this is a bullish or a bearish chart. So if I'm not sure of something, I just kind of stay away from it, basically. Here's LQD, which is a corporate bonds. This one is a little more clear because these are not 52-week lows, and this is a stronger looking chart than TLT. I mean, look at this, is a stronger surge, and whereas TLT fell below the 50-day moving average, LQD did not. We stayed above it, and I mentioned we had multiple hammer-like candlesticks, and I actually drew in this support resistance line, and it looks like we held it. So we held it, and we're attempting to move higher. So if this is a double top, maybe this is a double top and we will unravel, but the stock market itself is looking a little overextended. So if something spooks it, I think we might see a money move back into bonds. And here's the LQD on the weekly time frame, and this is why I'm much more sure about LQD than about TLT, because these are all-time highs, but these are not 52-week lows. In fact, this is a exactly breakout area. So we had a breakout right there above previous highs. We pulled back to exactly that area, and now we're bouncing off that area. Where we will go from here is anybody's guess, but it's entirely possible we will continue higher, and this could weigh on the general stock market. Right, let's continue to the Forex universe. This is US dollar in a daily time frame. I think this is a bullish chart. These are 52, well, actually multi-year highs. We basically corrected within a bigger uptrend. We corrected exactly to the previous low right there, and look at this, 1 2 3 4 5 6 7 8 days in a row we had a black candlesticks. In other words, we were price gain. So we came up to this previous rejection spike, and I guess we'll see if we will roll over here or if we push higher from here. Again, generally speaking, I think this is a bullish chart. Here is a weekly time frame with a longish correction here, 1 2 3 4 5 6 days, 6 weeks in a row rather. Now it looks like we had, it's possible this is a bullish engulfing already. So if we bottom here, then we could see push higher by the dollar and maybe even fresh multi-year highs. And when we get to gold, of course, it will do a number on gold. Here's euro versus US dollar on the weekly time frame. Pretty much it should be obvious that this is a bearish chart. So we had a big drop, couple of bounces. This is a weekly chart, so it takes a long time. This is 3 years worth of data, but these are multi-year lows. Here we had break to multi-year lows, but then we had several 4 weeks in a row of kind of bottoming action. We had, you can see there was some buying going on. Finally we rallied. We had 4 weeks of rally, 5 weeks, and now looks like we are, maybe this is a bearish engulfing, but I think the bigger resistance lies up here with this spike, which is at around 108.75. So I think we may actually see another spike here to get the stops up here. British pound versus US dollar went pretty much nowhere, gained for a week, but it's pretty much flat. Still a bearish chart. I don't see any reversal patterns just yet. This is US dollar versus Japanese yen. Here I thought that these two candlesticks, this is a weekly time frame, I thought that these two candlesticks were pretty much it and we were going to rally. But then we had this big red candlestick. But notice the interesting thing is that we never actually closed below those two hammer candlesticks. And the same thing here on this week as well. I mean, we punched below, but we closed above. So looks like these lows are, I think they're, maybe there's buying going on here, I'm guessing. And if we stop falling, maybe this is a, falling flag basically. So like this is a surge and then a falling flag, and we can see a breakout to fresh 52-week highs. Right. One of the components of US dollar index is, of course, Canadian dollar. This one, I still think this is a bullish chart, so these are multi-year highs, big correction. I mean, this was very overextended. So we had a big correction. So again, attempting to move higher, another pullback. Now, I feel like we're not yet done with this pullback, so maybe we'll correct further. I mean, there is a really good support, I think, here at around 1.275 or so. So maybe we'll pull back a little further and then finally bottom. And here's another component of the US dollar index, Swedish krona, weekly time frame. So bullish chart, big sideways consolidation, breakout. Depth of the pattern is about 10%. We kind of went. We're not there yet. I don't think we haven't gotten to about 10%. So looks like we surged and now we pulled back, very sharp pullback, and now looks like we're attempting to rally basically with a similar to bullish engulfing pattern. It's possible. Maybe this is already it. So then, if this rallies, then we can see a general rally in other dollar components, basically. But to summarize, I think the dollar is bullish long term, and maybe this is it. Maybe this was the entire correction we saw. All right, moving on to gold. Okay, so this is daily time frame for gold. A rather impressive rally here of the lows. Basically went through the first resistance here around 1200. Held support here at the 50-day moving average and continued higher. Now this is an important level. Here we had basically at 1240 or so. So we had first support break, a rally, but then we had another support break right there. So there's a lot of things happening in this area, and looks like now we're coming up to this area and kind of attempting to go above it, and so far we haven't been able to do that. So it remains to be seen if we're going to punch through this resistance. This rally is getting really quite overextended, and here down below I have the US dollar index. Usually vast majority of the time the dollar and gold move opposite directions, so if dollar going up, gold is dropping, and vice versa. Here you can see dollar is trading more or less sideways and dropping here, and then gold was rallying here for a couple of few days. Basically we see dollar is rallying, but so is gold. So we now basically we need to know, we're going to find out relatively soon who was correct, whether it is dollar who is going to continue its corrective action, and by extension gold will push higher, or alternatively maybe gold will roll over and dollar will continue higher. Here's that same chart on a weekly time frame, and here's that same level, 1243. We basically came up to that level and touched it as high as 1246 this week. So far I don't see a breakout above this. The problem is that with all this big candle and this drop did a lot of damage to the chart, and now there's a lot of resistance levels that, you know, here's resistance. This resistance, I guess, was taken out, and I thought that this was already resistance reaffirming itself, but then looks like we punched through it, so that's a good sign. Now there's resistance up here and resistance up here, so there's a lot of resistance up here. Here's GDX on a daily time frame. Kind of interesting chart as well. This is an impressive rally. You know, this is about 30-some percent, almost 40%, I think. Let me take a look. Yeah, about 40% rally, so that's pretty impressive. But then again, those are small cap stocks leveraged to a commodity, so it's not surprising. Here I pointed out in my last couple of videos that we had a bullish divergence here, and we had market breadth pushing higher while the index itself was still trading like down here. We already had breakouts in advanced decline lines and also in bullish percent index, so that's all very good and positive signs. Now actually bullish percent index hit 60%, so that's quite impressive from basically almost zero back here. Now it makes me wonder, if I was a bear, if I was a bear, gold bear, I guess, and I'm going to say, where do I want to short gold, and gold, in this particular case, gold miners, and looks like we had a very extended rally. We're coming up to resistance right there. That's a previous high. There was a broken support here, and, you know, attempted to break support, rally, broken support, attempt to recapture the support, rejection, and a strong, very strong drop there. So we're there right now. Where are the stops hidden for GDX? Where are the short stops? Where would you short GDX? And we're getting there, basically. A first short stop placement would be, I guess, above this highs here. If this fails, it would make sense to place your short stops above this highs here at 28.48 or so. So, you know, again, if we do take out this resistance, then next resistance is up here at 28.60 or so. Here we're moving on to the energy sector, and this is XLE, Energy Select Sector ETF. So 52-week highs here, and then a sharp pullback. Actually, if you listen to my previous videos, I said that I didn't think this was a sufficient pullback. I thought we were gonna fall, you know, fall further. We did fall further. So here what concerned me is this divergence, which continues, by the way, advanced decline line, and we made another lower low here, an advanced decline line, you know, even below this low. So I wonder if we're done correcting or if we're going to correct further. I think it will depend on oil, obviously. So let's look at oil next. Here's oil on the weekly time frame. You know, we had a drop here and then a V-shaped reversal. So I wonder where is this going. Basically, neither the bulls nor the bears again took advantage of the situation, and we traded sideways after much back and forth. So for the week we basically were flat again, and again this range continues. So from like $50 to 55, still a trading range, but I think we're gonna need a breakout above 55 or break down below, I guess, $50 to see a major push one way or the other. And here's natural guess on a daily time frame. So big surge here from November to 52-week highs. Then we had a big correction, and unfortunately it was this big gap. And so I'm not, entirely sure what to make of it, but this is not a great sign. And we did pull back somewhat. So looks like we are attempting to bottom here. Maybe we have bottomed, maybe we haven't. It's difficult to say always where the bottom is, but in general I think this is still a bullish chart. We had a breakout above resistance and then continued making 52-week high. So maybe this is like a fallen flag correction, or maybe fallen pennant, breakout and a fallen flag. So it's possible that we basically stopped falling and then eventually, and we're going to resume an uptrend. All right, if you found this video interesting, please please do like it, share it, comment. If you have any comments, please do send them in. And please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now. So please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because preservation of capital is really one of the paramount to the success in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.